Welcome to our course on our case study for Manchester United, one of the most famous football clubs in the world. This is going to be an introductory course to our final model output, and it's going to be followed by an update of the recent rankings. And afterwards, in this year, we plan to film the whole process of building this interesting company's operating model, which starts from estimated rankings from Premier Leagues, European Champions Leagues, and FA Cups, which eventually leads to revenue such as broadcasting revenue, ticket sales, and advertising revenue. And eventually it's going to lead to our valuation on Manchester United, where we introduce a multiple valuation techniques when it comes to football clubs in specific. So let's start from our cover page. As you can see, we have a beautiful picture of Old Trafford. For football fans, probably this is going to be one of the most famous stadiums in the world and one of the stadiums that you probably want to visit throughout some point in your life. Personally, I'm not a fan of Manchester United. I won't comment on my favorite team, but still it's one of my dreams to watch a football game here. And starting about our financial model, we're going to start from the valuations. So as you can see, we have applied 6 valuation techniques for valuation of this company. We have a EV to revenue multiple. We've used a transaction comps. We have a model specific for football clubs called the multivariate model, and we also have recent transaction comps models. We also have a market cap for Manchester United just for comparison purposes, since Manchester United is public at this moment. And we also do compare it with 2 other valuation sources, which is Football Benchmark and Forbes. These 2 institutions, they do a valuation of worldwide football clubs, and they publish a report on that. So they also have their own logics and their own valuation techniques to value football clubs. So those techniques and those results are here just for comparison. And I think everything else is quite straightforward, but one very interesting valuation technique would be the multivariate model. We did analyze a paper on the valuation of football clubs, which we will also share in our full-scale lectures later on. But the paper states that the enterprise value of a football club, it consists of 3 parts. Number 1 is the revenue plus net assets part. So in other words, the size of the football club is very important. So it tries to include both the income statement factor and also the balance sheet factor. So A is kind of like the factor on the definite size of the football club. And then they have also considered net profit. So the more net profit they have, they use the multiplier. So if they have positive net profit and if the margins are profitable, the multipliers would be over 1, which multiplies the A part of our calculation. And then one interesting part, so up until A and B is quite common factors that we apply to in ordinary companies as well. But number C is so specific to football clubs. It considers the stadium capacity and the wage ratio. So it thinks that the bigger the stadium capacity, like Old Trafford, for instance. It has a stadium capacity that's very big. It has an average of 73,000 spectators, and the occupancy rate usually is almost 100%. So it suggests that the stadium capacity is very important in creating football club's value. And then it divided by the wage ratio, which, wage in a football club is mostly the player's wage. So if you have a star player like, for instance, Cristiano Ronaldo, the wage ratio is going to soar, and it indicates that, in those cases, it decreases the football club's value. That's the gist of the multivariate model. And of course, we have the transaction comps, which indicates, recent transactions related to football clubs. And even for Manchester United, there was a recent transaction on some of the main shareholders selling off their stakes, a portion of their stakes, to a third party. So we've considered that valuation, how they valued this Manchester United Football Club at that time, and we've included it in our valuation summary as well. But if you see our valuation tab, most of the other balance sheet and cash flow statement items are not that important when it comes to valuation. The only criteria that seems important in this case is the revenue. So we have revenue when we're doing EV to revenue. We use revenue when we do the multivariate model. So revenue seems to be the only component that's relevant in our financial model. That's why we spent so much time on building a delicate model for revenue, and plus we really enjoy building this model because simply it's all about football, and especially if you're a football fan, it's quite interesting. So if you go to the revenue tab, you can see how Manchester United's or most football clubs' revenues are consists of. It consists of the commercial revenue, the broadcasting revenue, and the match day revenue. And commercial revenue is further divided into sponsorships, and then we have retail merchandising and others. So things like uniforms, cups, scarves, anything related, any merchandise related to Manchester United, those kind of revenue are recognized into commercial revenue. And then we have a huge portion of broadcasting revenue, and broadcasting revenue is simply revenue created from broadcasting their games. And the interesting thing is that the broadcasting revenue is very different by the nature of the games. So if it's a domestic competition, so in this case, if it's a English Premier League game, the revenue per match, so the broadcasting revenue per match is quite stable, and plus the number of games are fixed to 38 games each season, well, with the exception of 2021 when we had COVID. But all the other seasons we have 38 games. So it's relatively very stable on domestic revenue. But when it comes to European competitions, the interesting thing is that the number of matches first change. It changes because this has a knockout component. So if you proceed further, you're going to have more matches. But if you get eliminated soon, you participate in very small number of matches. So the number of matches differ, and plus the revenue per match also differs. And this is also interesting because the more you proceed in your knockout stage, the revenue per match for broadcasting, it increases dramatically. And one thing more important factor is whether Manchester United plays in the UEFA Cup or whether it plays in the Champions League. it creates a huge difference in revenue per match in broadcasting revenue. So apparently, because only the first place to fourth place in the English Premier League, they can proceed to the Champions League. If they're fifth to seventh, they are going to proceed to the UEFA Cup. So what the ranking would be the previous year on the English Premier League affects next year's revenue. So we have to make very good assumptions on the rankings in the domestic competition. And then we also have other competitions such as the FA Cup or some type of sponsor cups. But as you can see, their revenue per match is not that big. So in terms of total revenue as well, it's not nearly as important. So our key focus would be the European competitions. Then lastly, we do also have match day revenue. So this is simply revenue from tickets. And we can only recognize ticket revenue from home games. So games that are actually played in Old Trafford. And again, the number of matches differ year by year, mostly because of the number of European competition games that they perform, or also, the FA Cup and the other cups, they also do have an elimination component. So this varies year by year. But revenue per match seems very stable, relatively, mostly because the average revenue per ticket in Old Trafford, it didn't increase that dramatically. So in other words, the ticket prices, if you do a little bit of more research, it was quite stable over the years. So that resulted, and of course the Old Trafford seat capacity, it didn't increase as well for the last almost 10 years. So apparently match day revenue, it's almost flat unless there are more number of matches. So again, when it comes to financial modeling and forecasting the future, there's not that much we can do about the match day revenue. The most variable component in our financial model would be the broadcasting revenue. So we tried to build a whole tab just on the rankings of Manchester United. And we can see that we have a summary up here. We have historical numbers on the standings in the English Premier League. They were sixth, second, sixth, third, second, sixth, third. And on the years, they were sixth or second. Up until fourth place, they have the rights to play in the European Champions League, so they have numbers on those relevant years. But in the years that they haven't qualified to the European Champions League, we've put just a simple N sign to indicate that they haven't competed in that competition. So we have a reference for those numbers, which matches to which. And then for the projection. For the most recent years, because if you look at the valuation, actually because we're not doing a DCF for this football club, this football club is not that profitable, so running a DCF doesn't create that much club value, so we're not simply doing it. But you can see that what most important is the revenue for the next year or the current year. So forecasts up until the next 5 years is not that important. What's more important is the next year's rankings. So how would we forecast next year's rankings? So if we're in the middle of the season, it's relatively easier because we can see how the players are doing, how the managers are doing, how the club's doing. We can see that. And plus during the season or even before season, there are some odds from maybe gamble sites or something. So these could be very handy when forecasting the rankings of Manchester United, because these people really put in a lot of effort to come up with these numbers. So I think maybe it's best practice to use those numbers. But of course, that can be our base case, but we also have our best case and the worst case. So the best case would be that they win the English Premier League, which is very unlikely in my personal opinion. But anyways, they're second place, first place, second place, first place in the best case. But in the worst case, they're fifth, fourth, fifth, fourth. So I'm being relatively generous, considering that they have ranked sixth in 3 of their last 7 seasons. And also for the European Champions League, the UEFA Europa League, we made forecasts. We tried to make our best judgments on the results. And we also have a component on number of matches, because depending on the rankings and how well they do in the future, the number of matches will change. And lastly, revenue per match will also change. As mentioned, especially on the broadcasting revenue, it's going to change. And there is a table from the European Football Association on the prize money, the payout, the TV pool on the Champions League and the UEFA Cup. And this seems to be directly related to the broadcasting revenue. So depending on your performance of your football club, it decides how much revenue the company can recognize. So we've tried to make a dynamic model to pull up all of these numbers. I remember using index match, VLOOKUP functions to make a dynamic model depending on the expected rankings of this football club. So that's pretty much it. This was a rough summary of our financial model for Manchester United. And now what we're going to do is, coming up, we're going to make some updates, because the 23-24 season of the games has been finished. So we're going to update our rankings. We're also going to update our raw materials as well. We're going to update valuation tabs, because I think Forbes and the European Elite, these 2 institutions, they issued a new version of the football club valuations. So we're going to do also a short video on the updates of this financial model.